Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 15th of February, 2022. This is episode number 2172. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, good morning, good afternoon, bon après-midi, guten Tag, guten Abend, all of that good stuff. So let's take a look at where we are. Look at that. Risk on. The market's seeing a pop here, mainly on tensions easing in the Ukraine Russia crisis. Bit of a manufactured crisis, if you ask me. So the conflict, there's some troops backing off. That Russia has pulled back. Russia's saying those troops are being pulled back because exercises are coming to an end, standard exercises. This is just a cat and mouse game, and the White House is screaming yesterday all day long. They have evidence that they're going to attack on the 16th, and it's imminent, and we're pulling people, and it's. I understand that governments have to do what they need to do to secure their citizens and their diplomats, but the news flow is just so noisy yesterday. It made several trades that were pretty solid just completely implode, which is really annoying. Um, so that's where we stand. PPI came in and it was much worse. Came in at 1% versus an estimated 0.5. This is the producer price index. Final demand in the U.S. Again, came in at 1% higher than the 0.5%. This is an inflation measure. And the final demand year on year came in at 9.7%, very high versus 9.1 expected. So the cost of inputs is higher. Today, we've got we had some key numbers: claimant count out of Great Britain, unemployment rate out of Great Britain came in line, and then the zoo economic sentiment index out of Germany, which is a key sentiment figure, that came in at 54.3 versus 55. Europe was already leading when we opened. And then the Russia-Ukraine news really pushed it higher. And what's left is what's left for today is really the tick flows, which is minor. API crude oil stock change for those who are trading energies, which are coming off. You can see crude is down 300 basis points. There was a lot of premium being priced into crude supply being curtailed as a result of sanctions on Russia. And so it's taken quite a few pops from where it was at 86, now at 92. 86-ish is the scene of the crime from when this issue has started. So that's where we're expecting it to go back if tensions ease off completely. We get the inflation rate out of China at 8:30 p.m. Eastern U.S. time. We also get PPI, and then this FDI figure, which has already come out. Actually, I don't know what that is, but that's where we stand. Pretty decent pop in the crypto space. We're seeing Ether up over 7%. It's still struggling. I mean, if for those of you who recall this chart from Thanksgiving, still hasn't changed. I added this indicator of a minor level, minor resistance. Let's see, minor resistance at 45.5 or so. And now there's a small over underline at 39,500 for Bitcoin. But really just in a chop environment, you could see we're trading right inside of this distribution here. We're filling in what's here. And once that gets done, we'll see the next leg. I was bearish on crypto as I posted this on December 4th. I've been bearish since about the middle of November. Still own some ETH, but really waiting for this thing to figure out the next leg. So that's a little crypto action there. Let's look at the S&P. The S&P has traded 311,000 contracts. The overnight inventory is 82% long, 82% long, not devastatingly offsides, but relatively offsides. The settlement for the S&P is somewhere around 43, 94, 50. And we're trading about 53 points higher. The range is outstanding, 86 and a quarter points. This is more than 2 sigmas wide. And so the range is telling us that we're likely to see a lot of action. There's a lot going on with the price map. The price map is very clean, very clear. The trade is not. Yesterday, I found the trade to be noisy. I also found Friday's trade to be noisy. Just a lot of whipsawing, and it's very easy, I think, in this environment to get emotionally involved, or to have FOMO trades, or to have trades that ultimately end up blowing up and then getting us emotionally involved. So make sure you have your bearings. Make sure you have your bearings, and you keep things very clear as to what you're looking for, and be prepared to respond. So inventory's at 83%, range at 86.5. The point of control is at 44.50. We move from mid-century to century to mid-century to century. We often have a lot of size at every 10th handle, so 44.60, 70, 80, and so on. You'll see a lot of delta there. These are major strikes. The other strikes are 5 points apart, so there's a little bit of a wiggle there. And so that's just natural. But currently, we're opening above yesterday's range. We have a gap open versus the prior day's range. We are above the 200-day SMA in the S&P. And we're back in the crunch zone with 45.05 being the key target. So let's take a look at what we did yesterday. My chart is way off because we're much higher. So here's where we were yesterday. Kind of a megaphone formation here. We open, as I talked about, we are going to get some noise. We were opening in lower distribution of Friday. We did test below, but we really formed a nice point of control up above at 44.15 yesterday, and we opened at 44.03. The 4400 area is a low volume node, a composite low volume node, and a battle area. It's an over underline. So all of those pieces put together tell us that we are very likely to open in a pretty noisy environment. We did. The expectation yesterday is we would test 44.20 and 60. 44.20 above and 60 below. I'll show you the chart there. That was scenario 2. And we did it in kind of a pretty funky way. I was not here for this. This occurred on news right here. I forget what the news was, but I believe it was Ukraine-Russia related. And then all we did is we moved right back into a channel, right back into the open, and we finished in what was basically a balanced profile. We had a neutral day, neutral normal. In other words, it broke the IB high, broke the IB low, and it finished in the middle, and it finished in balance. Point of control, full session, and RTH mid and VWAP all in the same area. This is complete balance on the close. And oh yeah, that was the Ukrainian president. Thank you for that. Yeah, it's really odd. Really odd behavior from everybody, really. So that was yesterday. Here's what was expected. Just to go back, this is what was expected yesterday. Why is my face in the middle of this thing? There we go. In fact, let me turn that off. This was what was expected. If you recall, the price map had 20 83 and 60 on the low. And so therefore the scenarios will follow the price map. That's what these lines are really trying to portray. Looking for a test of 20 down to 60, come back to the open, come back to the middle, which is around 4,400 where we were. So that was exactly what scenario 2 was looking for. Test down, and then it goes to 20. We went to 2175, and then we dropped to 60 on the news, just luck, and we finished right where we opened at 4,400. So this was scenario 2 on the nose. Since then, what we did is we opened in this quiet kind of open, another megaphone type open, a test up, test down, and then the news comes in. The troops are being pulled back. Those at about 2:30 a.m. That was about a half hour after the European markets opened, and we have done nothing since. We've gone sideways. We dropped a little on PPI because that number came in worse, but overall, we've just balanced up here. We formed balance up here. We are balancing in the thin area from Friday in this LVN zone, and we tested this high volume node, this 4468 on the price map, a very prominent level, and we stopped right at it. I had this set as the extended 4400 defense level. So sellers who are defending the 4400 handle or range, the last line of defense is 4468, and that happens to be the overnight high. And again, we have a completely balanced profile on top of 4450. There's a lot of room for this thing to drop. You could see the 200-day simple moving average is right here, and we have VWAP and mid beneath us. So we are sandwiched right here between the 4450, the 200 moving average, and then yesterday's range high. Oh, I guess it was 4420. 4420 on the dot yesterday, and then we have the mid at 25. We have yesterday's high at 20. So there are a lot of data points in between, and we're opening in a gap. So gap rules apply today. It's very important for us to see, is this market going to respond back down into 4420, into the full session mid and back into 4420, or is it going to test a little bit and then become initiative, which means that it pushes through to the overnight high at 4468 and start working itself to the big magnet in this area at 4505, 4505. So that's what we need to find out this morning. There's no way to tell what it's likely to do, but the overall, as it shows in the convergent trading pre-market summary sheet, it is a risk-on sentiment. So that risk-on sentiment is likely to continue to hold for the day. So any pushes lower are, barring news, any pushes lower would be expected to be supported and to act as pullbacks for longs more so than initiating a short. If we get a strong drop, really good volume, a strong drop right back into the prior day's range, now we start to play on the 43.95 prior VPOC, 43.97 prior VPOC becomes a target. So let it drop. Don't worry about missing the big drop. Then look for the pullback towards 44.20, 25, and so on, and look for it to roll over back into the range. And if it rolls back into the range, we're looking at a quick test of the 44.07 value high. And if the 44.07 value high goes, then we're looking at 43.97. So get back into the range, try to get out. As soon as it starts falling back into the range, that's a short setup. Define your risk, and then look for value high, because yesterday we had balance, so value high is valid at 44.07. Look for a pullback, If you didn't catch that first run, look for a pullback on value high. And then as soon as it starts to roll through the 4407, look for 43.97 as the point of control, and then we're back in balance. It may go to value low, which is a 43.80, but not likely. Okay, so that's the key play today on the downside. That would be scenario 2. Scenario 1 is looking for a pullback continuation on the impulse from the overnight session. Did I lose you all? I know that's a lot to digest, but this is how we play it. I thought I set this thing to... Okay, yesterday we were here, and we are looking for here as a magnet. So that's where balance is. So we got to the 44.68 right here, and the next big area to test is the 45.05. 45.05. So on the map, again, we are stuck in between the two major prominent areas. Let's extend these out because they're filling in. So watch how it fills in. We're stuck between the two prominent areas, and we've held the bottom MCV right here, 43.43, and we're likely to just migrate up to 45.05, which gives us the mid of the range, and it puts us in a spaghetti factory right here. The monthly VWAP, the 20-day, and so on. So that's where we stand. I'm trying to prevent a sneeze here. So that's where we stand. Anyway, enough said there. Let's take a look at what's expected for today so you can all get ready to trade. Okay, so here's what I'm looking at for today. Hang on, let's suppress band color. And okay, I've modified the chart a little bit. May seem a little noisy, but I'm adding this coloring to the chart to signify significance, to bring out significance of certain levels for convergence members. So what are we looking at today here? We've got this this area that we're in right now, which is the over underline. Let me actually unsuppress labels. Boop. So this is the over underline. So we're looking at coming in here. We're looking at an open auction right here. We're back to the over underline, which is at 44.44 of 44.44. I'm looking for this thing to be responsive back into potentially 44.35, potentially into the 20s, and then I'm looking for it to turn around and push higher. The point of control just shifted down right now into the 40s. Pull back, use that as a base, look for the 68, and then we start to migrate up the channel, and our magnet is this 45.05. This is scenario 1. So pull back, leave a gap, gap rules apply, look for a gap zone to be filled within the first hour. If it's not and it starts to turn up, that's a long. The long is likely to run into obstacles at 75, 88, and then the target becomes 05. That's the key trade of the day up there. On the downside, so this is 44. The key downside support is 44.03. So the secondary scenario, open auction, push up, rebalance inventory. So break through, get down under the point of control, give us the point of control stat. And then we're looking at it pushing. So it tests The full session VWAP, full session mid is unable and gets back into the range, consolidates, and then pokes through value high, and it comes right back in line with 4403, and then it gets to 97, becomes the key target. The 97 gives us the prior point of control stat, gives us the prior settle stat. It may give us the overnight stat. By the way, the overnight stat yesterday was not hit. Very unusual circumstance, but we were well on our way to getting it hit up here, and then that Ukrainian stuff came along. So these are the two main scenarios. Just pay attention to the prices. Really, not a trade wisdom segment here, but if you can do all of the analysis in the world, you could have the best system. But if you're not prepared to act on that information, when the market gets there, when the market comes to you, and we want the market to come to us versus us chasing it, if you're not prepared to act on it, then it doesn't matter. Then all you did is just kind of, you're a hobbyist. You're just playing a hobby. It's really important as part of this process is for you to decide for yourself. Don't take what I'm telling you here. For you to decide for yourself what your price map is. What are the key numbers, the key areas that the market is likely to test as part of its auction process, as part of its auction mechanism. So I try to outline those here. I talk about them in the Head Trader channel at Convergent as it occurs. But really, you need to do this for yourself, and you need to know, okay, this is what I'm looking for. And then the rest of this, the lines, the scenarios, is just preparing for the most important potential trades for the day, so that when we do put the trade on, we're not getting out for 2 ticks and watching it run for 30 points. We know that, hey, it failed to test here, came back, I got short, and it took out that last low. So I'm going to hang on here for a test of 4407, 4403, and 43.97. That becomes my target. It gives us much more substance to trade off of. That's the goal of these lines. The market doesn't have to do what the lines show. And in fact, if they hit like scenario 2 did yesterday with 20 and 60, it's more of a rarity and a gift than anything else. But the plan still makes money, is what's expected, right? So again, past performance is not indicative of future results, but I've been trading this way for 15 years now out of a 22-year career, after being a high volume market maker in the futures. And so this kind of process should make you a stronger trader. And that's what I strive for with these trader bites, is not to entertain you, is to give you, there are plenty of channels to show people scalping and entertaining. And that's all it is, it's entertainment. I don't believe it's real trading, or how trading should be done. You know, doubling down, tripling down on an NQ for a $2,000 drawdown so you can be up $800 for the day is not my idea of a sustainable career. But I'm not picking on anyone in particular, but I do want you to succeed. So the way to succeed is to have a plan. Good luck, and I'll catch you tomorrow morning. Take care.